Now, having discussed about the growth opportunities in India, it is important to understand the ever-changing and evolving market trends that dominate the economy. And to discuss that, we have Mr. Anand Shah, who will speak on evolving markets and changing trends. But let me give you a little background on him. Mr. Anand Shah is head PMS and AIF investments at ICICI Prudential Asset Management Company Limited. He has more than 2 decades of rich fund management experience in the asset management industry. Prior to this stint, he was deputy CEO and head of investments at BNP Paribas, responsible for investments and overseeing both onshore and offshore mandates, sub-advised and sales. He has previously been the recipient of the CIO of the Year Award 2014 to 15 from Asia Asset Management and has also won multiple other fund level awards for his investment performance. Over to you, sir.
Thank you, Akriti, for the introduction. Can you hear me loud and clear? Yeah. So, thank you, one and all. A very, very good afternoon now. And a lot of thanks to PMS AIF World for inviting me. So the topic or the subject we want to discuss today is evolving markets and changing trends. And we have approximately 10-15 minutes to do the same. So what I thought that while we can discuss at length about various aspects of the market, I'll focus on one small aspect which we believe is a significant change in trend as far as Indian economy and more importantly for the equity markets. So with that, hopefully it should be of interest, as well as it would be a little bit of a different perspective on the market that I believe I would be able to share with you. So with that, let me start. Chami, if you can help me with the first slide. And the first and foremost, I think the significant change that is happening over the last decade versus this decade. The big thing we are talking about is a change in the trend. We are of the firm belief that what has happened in the last decade and a half, the future, what holds for us is not exactly the same. There are some significant changes that are happening, and that should reflect in terms of not only the portfolios, but also in the way we look at the markets. So first, at the aggregate level, if you see the next slide, at the aggregate level, we have seen a change in trend in terms of the profitability, the health of the India Inc. If you go back before December 2019, January 2020, we almost had a few years of negligible earnings growth rate, while the macro economy was not that challenging. Of course, we had certain disruptions like demonetization and GST and whatnot. But otherwise, the macro was not as difficult as it was in the last 3 years. So I'll come to that. But in that period, while the macro was okayish, we had a very, very difficult period of earnings growth rate for India Inc. as shown in the middle table, which is April 30, 2015 to December 31, 2019. We had a significant challenge as far as earnings growth was concerned, be it Sensex, mid cap or small cap. Come January 2020 onwards, almost for 3 years, if you see, while we had a very, very difficult period on the macro front, be it COVID wave 1, COVID wave 2, or more recently, Russia-Ukraine energy crisis and a very significant interest rate hikes in the developed world, especially in US, which led to strong dollar and rising interest rates globally, leading to a lot of FIOs. So in that period, we have seen a very strong earnings growth rate. And it's very perplexing that while the macro was very challenging, how come India Inc. is doing well. So I just want to touch upon that piece. If I go to the next slide, you will see where is it coming from. So if you see a period prior to 2019 was a period where China was exporting deflation to the world. What I meant by that is you had an overcapacity in manufacturing in China, and they were the factory for the world and would be able to produce anything and everything under the sky cheaper for you. So from safety pin to boilers, from tires to tiles, they had ability and they were able to push volumes of these products all over the world, including India. And we've seen it very well, which was a very good news for consumers and consumer-facing businesses. So if you see, I've divided the market into two pieces, which is B2C and non-B2C. And clearly, there is a stark difference between what sort of businesses were doing well and what sort of businesses were actually struggling. So it was a very good news for consumer-facing businesses and consumers. It was a very, very difficult period for manufacturing globally ex-China, even the Western world so everywhere the manufacturing was suffering. What has changed over the last few years, and more importantly, showing up drastically now, is over time, China's various advantages that it had in manufacturing are waning, with cheap labor, cheap energy, significant government incentives for manufacturing exports, or negligible pollution costs. Basically, you could really had very, very easy environment as far as pollution was concerned for the manufacturing sector. All that is changing. The bank credit availability for manufacturing sector is also changing. And to that extent, we are seeing significant shift. Consumer-facing businesses are still doing well. India is rich in terms of demography, and to that extent, will continue to consume to some extent. A little slow, but nevertheless will consume in the light of high inflation. It is the manufacturing which is leading the way as far as earnings growth. And I think this is a big change in trend is what I'm talking about. If you go further, couple of, one slide which is on the market cap. So while the market has recognized that, even if you see, Chami, if you move to next slide, this was profits. The next slide is on market cap. Very clearly, market has seen a change in trend as far as portfolio performance is also concerned. A very different set of portfolios are doing well versus what they have done in the previous decade. But we believe this is just a beginning. I break it down further for you. If I go down, one more slide, which is on the earnings. Has the market recognized this change in trend? I don't think so. So from the market's perspective, market is actually still thinking that the last decade, what has happened will continue. And to that extent, we continue to see no derating or re-rating for any of these sectors from a long-term perspective. You see, while the market is overall derated in the last 2 years, but still the market's favorites and market's preference is for B2C businesses, and B2B business continues to remain subdued in terms of how the market perceives it. If I go to the next slide, I think there's a little bit more breakdown for you. So again, when I'm saying I want to focus on changing trend, as that's the topic, and not really discuss of many other things. There are 100 other things we can discuss, but this is another way. So while I showed you B2C, non-B2C, this is another at a sector level. If you see from left to right and the red bars which you see, that's a further breakdown in terms of what businesses have done well and what businesses have not done well in the past and in the present. And if you see from Bank Nifty, which was the worst performing sector, which had massive NPAs on the back of manufacturing, infra, cyclicals, utilities, has bounced back significantly from pre-2019 to post-2019 era. And if you see the extreme right is auto, which did extremely well, benefiting from a global deflation, from a very benign commodity prices. Their input cost was very low. They had significant margin expansion through the decade when the input inflation was low. I think they're giving up some of those gains. Ditto for consumers, it's still healthy, but it's sort of slowing down. So this is the big change in trend we are talking about. While the market has not yet recognized that, I go down one more slide, touching upon what sort of sectors have been still re-rated and what of sectors are still not re-rated. And we can clearly see sectors which we believe have done very well in last 2 years and expected to do well even in coming years, as we believe a lot of this trend change is permanent. Market is not yet recognized it. Market is still valuing them fairly conservatively, whereas some of the sectors which have slowed down in terms of earnings have continued to do well in marketplace as they got re-rated, the P multiples went up. And that's something is an opportunity from the marketplace, I speak. So if I go a little further and talk about overall markets, so that's a big question. Kya lagta hai market? What do you think the market is? I think market has been fairly reasonable. While the market's touching new highs and market's been sort of hovering near the highs. If I see the markets from 1st April 2021 till date, it's been very reasonably cautious. So while it's gone up, but it has not gone anywhere close to what the earnings have done. As I was showing you that from 2020 to 2022, there have been a derating in the market. So that reflects the cautiousness in the market, that reflects that while the trend has changed, the earnings have improved, market still believes this is one-off and this is not sustainable growth. And within this 20 multiple that you see, clearly there are two parts of the market, ones which are trading at 40, 50, 60 PE multiple, and there are the market areas which are trading between 10 to 15 PE multiple. And we believe there is a trend change in earnings, and this stocks, while they're cheap for the reason they've been cheap for the very difficult decade they had prior to 2019, I think they are ripe for the re-rating also. So it's wisely you have to choose what part of the market you want to be in. As far as we are concerned, we are very clearly been telling for last 2 years that we like manufacturing and manufacturing allied, including the banks which had been lending to these manufacturers. We like that sector more than the consumer-facing businesses, which will continue to do well, but been fairly expensive. So there are a couple of slides more, time permitting. Let me take you through them, which talks about what are the recent trends we are seeing. So while I was talking more from a medium-term perspective, but more recently, if you see, we have seen fairly good deleveraging. This was one bane of the India Inc. That India Inc. was heavily leveraged, especially in manufacturing, and not able to pay the debt, which reflected in banks' NPAs growing up significantly. I think that's the one good news, that the corporate sector has deleveraged fairly well over the last 10 years. Is now much more stronger and healthier than before. If you move to the next slide, in terms of banks, I think this is very important for the CapEx cycle to pick up. Banks are more confident today and more capable today of lending for any CapEx cycle from the private sector. So obviously, we believe the manufacturing and manufacturing allied, including the banks and the logistics and the industrial products, capital goods, these are the areas where one should be able to find good, strong businesses, good quality businesses, which can do well over the next 3 to 5 years. Yeah, a couple of more slides on the data for the same, be it PLI, be it PMI. Is again, India stands there. These are the opportunities that I see. The next slide, where as India moves from 3.5 trillion to 7.5 trillion, again, export champions, manufacturing exports, import substitution, investment, these are the areas which we like as we speak. So with that, I will stop here. Thank you very much for patient hearing. Wanted to keep it crisp, wanted to keep it sharp. This is one message I wanted to leave. There are other few messages, but I think the one clear message is that if you were to remain invested in the portfolios which have done well in the past, I believe that portfolios needs to be relooked, needs to be changed if required, given that the realities are very different in the next decade as it was in the previous decade. So thank you very much for this opportunity. I can stop here. If there are any questions, I can take it, but otherwise, have a very good day.
Some very interesting stats and data. Thank you so much, Mr. Anand, for sharing this with us.